Hey folks, Dan Frio here with your real estate news for November 26th, 2025. I think it's going to be another good day for these things over here. And a lot of home buyers are starting to take advantage of these little bit lower rates. If you look at the headlines today, home buyers make a last gasp effort before the holidays, but interest rates offer little incentives. Are they going to get a little bit better? We had a breaking news on a jobs report just came in. This basically solidifies I'm not really going to be paying attention to ADP much anymore. So let's get to it, because if you're here, you're most likely a home buyer looking to buy here soon. Maybe you're a home owner trying to track mortgage rates to see if there's a good opportunity to refinance. So let's get over to these, because my goal each day is to help you understand what the heck's going on with those and the whys behind it. So let's get over to today's news, folks. Home buyers make a last gasp effort before the holidays, but interest rates offer little incentives. Well, over the last few days, there's been a major push for the Fed to cut rates. There's now an 85% chance the Fed is going to cut rates. So you might get a little bit of a better opportunity in the spring, possibly, if you're looking to purchase a new home. Now, we had a report coming out yesterday saying 85,000 homes came off the market. That should be scary. I was like, well, no, this basically tells me those people didn't have to sell. They're like, well, I'll take it off during the holidays, and back in the spring when the market opens back up, I'll relist my house. So here's what's going on in the markets. You might be able to get a little bit of reprieve in rates, but you already did. People kept saying, okay, the housing crash, it's going to crash. You realize interest rates, they're down 20% from where they were right there here. In November of 2023, rates were about 8%. Now they're 6.2. That's a difference of right through here. They're at 6.2 now. They were at 7.8. That's 1.6%. That's a 20.5% reduction in rates. Don't hear anything about this, but you sure hear about housing market's going to crash. Well, let's get over to the economic calendar for the day. I think you're going to find some good news in this. So here's what was breaking news this morning. This is what I was waiting for my report. We had building permits. They were supposed to come in. They didn't come in, but we're focused in on the jobs market. This is what the Federal Reserve's monitoring. So right there here, it said continued jobless claims 1.96. It's been at 1.9 something for, I think almost all year. But down through here, initial jobless claims, 216,000. How's that fair? That's actually fantastic. Last reading was 222. They were estimating 226. It came in at 216. That means the jobs market isn't exploding or collapsing like ADP. Look at ADP's payroll numbers the other day, right through here. They paint a dismal picture. ADP minus 13,000, and that's why the markets were like, okay, there's got to be job cuts. But now that we have maybe a little bit of a better gauge on who the next Fed president's going to be, I think mortgage rates are going to come down, and this is only helping the equation. So we got building permits not in today, but we got continued claims, initial claims, durable goods orders actually exceeded expectations as well, saying the production in the U.S. is pretty good. So manufacturing picking up, jobs good, and the unemployment rate sticking steady right where it is. So let's get over to how the bond markets are reacting to this. If you're new to my channel, what we follow is right through here. This is a mortgage bond that determines your mortgage rate. What is your mortgage rate? Well, if you're a homeowner right now, I'd love to know that. So here's what we created. We created a tool right through here because we're here to help you if you're a homeowner trying to refinance. Rates are down 20%. Bet you didn't know that. How can these help you? Well, check out right through here. Put in the RateWatch 2.0 tool right over there. What rate you'd like to be reached out to go over if the rate hits there? Let's say, grab your mortgage statement. You're at 7. We'll put in, okay, I want to be contacted at 6%. What we'll do is we'll call you, go over the numbers. If it makes sense, we'll lock you in and get the process started. But that's where mortgage rates are going right now. But the bond market's painting a little bit of a different picture. Here's what I've been saying over the past few days. I was like, okay, the bond market might react a little bit different today based on normal, because there's probably not a lot of people working today on Wall Street. Think of it. The kids are off this week. Tomorrow's Thanksgiving, Black Friday. It's going to be a limited week. Nobody. If you're working today, you're probably giving half an effort. But that's what's going on right through here. So I'm thinking the bond market just is, don't do anything today. The markets, we got the news. It was okay. So if we locked in, you're in good shape. If you haven't locked in, we're in good shape as well. If you haven't locked in and you got a quote, go back to my website right through here and you can upload your quote right in through here. It's a loan estimate review. What we're going to do is we're going to review it with our rates. And let me tell you a little bit about me. My name is Dan Frio. I come in each day because I'm a mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. My slogan is one application, one credit pool. We're going to compare your loan rate with over 30 different lenders. How do we do that? We're set up with over 30 lenders. I'll give you my information here shortly, but this is what we do. So if you want to compare your mortgage offer with over 30 other lenders, just upload it right into the loan estimate review tab. So let's get over to the stock market. It's doing pretty darn good today. This is another yet Cinderella story. What I call a Cinderella story is across here. When you have the equity indices up, we got the Dow, the S&P, and the NASDAQ all up. We got oil continually going down. So anything under $60 a barrel helps the inflation. Under 57 even helps it that much more. And then we also have the 10-year Treasury. It's ticking up a little bit. We need this thing to go below 4 and stay there. And then you're going to see mortgage rates even continue to drop from there. So let's get over to my lock or float scenarios for the days. Let's go back to the website right through here. And so here's what I'm expecting. If you're closing within 30 days, just lock in. There's too much volatility. We got a 4-day weekend coming up. Don't know what's going to happen next week. And you can even see how a tweet, just a little tweet, can push these things up fast. If you got 30 days or more, if you're looking to buy, well, reach out to us. We'd love to get you pre-qualified, and then we'll get you qualified at maybe a rate that's 0.5% higher. Why? Wouldn't you rather be qualified at that rate, and then when you buy that house, the rate's where it is today, and your payment's $200-300 less? Probably you'd give us a thumbs up on that one. But if you're looking to build, what should you do? So let me give you my long-term expectations. So what we've noticed over the last 3 or 4 trading days is the Federal Reserve is basically the forefront of everything. What happened yesterday, there was one Fed official that kind of rose to the top of most likely being the next Fed official. The markets loved it. His name is Hassett. Pay attention to that name, because that name is going to probably come up more and more and more. So think of it, if he gets put on the Federal Reserve as the chairman, he's basically handpicked by Donald Trump, the President Trump. And then we're going to have another Fed official, and another one. He's taking an early retirement in February. So President Trump's going to assign another person, and then he just assigned another person previously about 2 months ago. So he's going to basically have the Federal Reserve packed, and they're most likely going to cut rates. What are they going to do? Well, let's get over to the CME FedWatch tool to see in 14 days, what in the heck's the Fed going to do? So what this is, the Chicago Mercantile Exchange, they look at options and futures and all the stuff that they do, and they try to make a prediction of what the Federal Reserve is actually going to do in 14 days. So let's drop down through here. It's going to give us a lot of numbers, but we're going to go through the probability. So the probability of a rate cut is now 82%. I think this was 85 yesterday, so it trickled down just a little bit. But just to give you some context on this, the probability of a Fed rate cut in December at the November meeting was 95%. Everybody's like, okay, hands down, the Fed's going to cut. Then some data started coming in. They're like, then this went to about 40%. But then last Friday, and then this Monday, and then yesterday, a bunch of Fed officials start coming out saying, we're probably erring on the side of cuts. So this thing jumped all the way up to over 80%. So now at the December meeting, there's most likely an 80% of a rate cut. I don't think if they cut now, I don't think the markets are going to like it if they don't cut. So we're expecting a rate cut at the next meeting. How that's going to do for mortgage rates, well, let's go back to this chart real quick. I want to show you here's where mortgage rates were over the last few years. Right through here, November of 2023, the Federal Reserve cut rates at the September meeting, September, October. From September, it was basically way down here. September, the Federal Reserve cut rates went from 6.2 to 7.2 in 4 days. That's why this is so important. But from that peak that we've seen from there, where are we today? All the way down here. It doesn't look like a major move, but it is. It's over 20%. So you want to just look at a historic gauge. If you bought a house prior to 2000, you got a rate in the 7s. Here's the charts right through here. So from 19, who knows when, all the way to basically 2000, look where rates were. 7, 7, 7, 7, 7, 7, 7, 7, 7, 7, and even up through here, they were 16%. So rates down here, basically from 2000 to all the way through 2020, there was either a bubble crash, a housing crash, or COVID. So all those are what's really pushed mortgage rates down to levels we've really never seen in history. So now they're just getting back up to kind of normal levels that we've seen all the years prior to that. So take advantage of these rates. If you're a homeowner, rates are down 20%. If you're a home buyer looking to build next year, don't think you're going to have any issues. I don't really think rates are going to skyrocket from here. I'm still saying with my forecast for Q1 of next year of 5.99 to 6.375. There is a spread there, but we're sitting sitting in right in that range, right over through there on the 30 years fixed, right across there. That's what I've been calling for that rate to be 5.99 to 6.375, and we've been right in that tight range for the last quarter. So my expectations for today, folks, is most likely the markets are just going to be kind of stagnant to a point. I know the markets are rallying a little bit. I think this is not going to be really that's basically where it's going to be peaked out. Same with the bond market. So I'm really not expecting any really moves in the market majorly today. Coming Friday, same thing, but Monday and Tuesday next week, the markets, everybody will be back and the markets will be adjusting. So I won't be here the rest of this week. Enjoy your holiday weekend. But I will be posting videos over the weekend to educational purposes. And these are pretty cool videos. So check out those. If you haven't subscribed yet, please do so over through there. And if you want to find out more about me and my team, just go to therateupdate.com. I've been doing this for over 35 years, folks, and I'm licensed in all 50 states as well as Puerto Rico. We have those over 30 different lenders we're going to compare your programs and rates to. So we're assuring you're getting one of the best rates and lowest fees in the market. Check us out, and you can find more about us at the Rate Update. Have a fantastic Thanksgiving, folks. I'll see you next week. Be safe. Give everybody a hug. Love them, because you don't are guaranteed that you're going to be here again tomorrow. So enjoy your family, and I'll see you back here next week. And if you need some help with a home loan, I'd love to help you out. Take care, folks. See you then. Bye-bye.